Hello everyone, it is Evan from the Trade Risk on Thursday, November 5th, here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, some individual names, and then a couple of trade ideas into the end of the week. Now, usually this video is posted on Wednesday. I was tied up yesterday, so it's coming out a little bit later. It's coming out today on Thursday, of course. So I do apologize for that, for those of you who are looking for the video yesterday. Now, before we jump into things, I want to remind everyone that I am hosting a webinar next week. Let me tell you some of the details here. It's next Tuesday, November 10th. I'm moving it a little earlier at 5 p.m. Eastern time. It's free to join. It's going to be about an hour long. I'm going to go through some of the ways I trade, some of the things I look for. It's all around, should be pretty educational. Ask questions. I'll be there. I'll stay there as long as there are questions. It's free to attend. Head to the TradeRisk/webinar or just click this link right here, traderisk.com/webinar. Drop your email here. If you can't make this date, I'll send you the recording. So I look forward to hopefully seeing a lot of you guys there. Now, if we get into the charts today, we got a lot to cover. The markets closed basically flat on the day, and that was after a little bit of some soft action this morning. We did try to trade lower today. If I zoom in here, you can see what today's candle looks like. We broke below yesterday's low and Tuesday's low, and we came in and just about touched this 8-period exponential moving average. Buyers stepped in and rallied us higher. So what I've been telling members all this week is we're looking for two things. We're looking for either a close below this 8-period exponential moving average, and the 8 isn't a magical line in the sand, but it is exactly what's been sort of guiding us higher ever since breaking through the top end of this range here back in early October. So it's been a good reference point. So the 8-period exponential moving average, that's the first thing I'd want to see for us to actually take notice and perhaps do something different. The other thing I'm looking for, and I was telling members this week, is a close below the previous day's lows. Until we get one of those two things, it really doesn't pay to sort of overanalyze the market, and it's best to just sit back and sort of enjoy this ride higher, enjoy the trend higher, and stop looking for, you know, that breakdown or you know, trying to catch every top or play for the breakdown at every moment. Not to say that there isn't risk out there. Of course, we can trade lower here at any point. We can start to retrace, but the trend has been higher. It's been very clearly telling you should be aligned and have some long positions on, and I don't think it does any good to just try and fight that and you know, think otherwise. I think it's good to be prepared and have stop losses, continue to trail them, but right now we still continue to trend higher, and I'm going to continue with it. Again, you know, these all-time highs over here are still a big magnet, is what it seems like. It seems like we just have a date with destiny to retest these highs, and you know, that's potentially on tap. That's the next big reference point on the upside. On the downside, I mean, we're just grinding higher. We're not really building too many levels for us to work with. Like I say, it's the 8-period exponential moving average. A close below there, or you start to close below the previous day's lows, and that's when you can start to, you know, potentially tighten things up and make some decisions in a more active approach. We didn't get either of those today. In fact, if you look at today's action and you look at what just happened here, I mean, we had our 2 days of pause. Traditionally, in this uptrend that we've been in, after 2 days of pausing, 3 days, 2 days of pausing and touching that 8-period exponential moving average, we tend to actually rally. We tend to continue the grind higher. So, I mean, you know, you'd have to think, is tomorrow just going to be that next push higher, which gets us closer to that 212 level? You know, again, I'm not here to predict, but that's what history has shown us here in the past. So that's the way I'm looking at this. Again, still glass half full. I don't think there's any reason to be overly bearish right now. I just don't see the real reasons. And if we look at some other indices, the IWM, for example, we are starting to change of character here. We are breaking above this prior resistance here at 116, and we're continuing to trend higher here, and that is constructive. We're starting to break the lower lows and lower highs in the small cap. So again, I think that is very constructive, and the Qs continue to sort of grind out here at these 52-week highs above all the fast-moving averages and still in very healthy formation. So that's sort of my read on the markets right now. Let's take a look at some other markets. Let's start with USO, and oil probably continues to frustrate the majority here. It's just chopping around. It's pretty directionless on some multiple time frames here. I think this range is still pretty applicable. We had a little false breakdown here, and you know, with today's weakness, it looks like we're coming back down to retest the lower end of this range. Still sideways, still not too much to do there. UNG, on the other hand, is starting to snap back. Again, this thing's been beaten up pretty severely, so a 4.6% day is great, but still it has a lot of damage that it's taken. So let's see if this one can continue to rally here. You know, maybe we have some short-term bottom put in place to work with, but you know, who knows with this right now. Still too damaged to really judge. And gold, speaking of damage, has really been hit hard here ever since snapping this level here, this 110 level. Again, look at how this goes back here. This was support for, you know, the end of 2014, at the beginning of 2015. We broke down from it in July. We got back above it in October. We were constructive. We wanted to see us hold above it, and we couldn't. We fell back below it, and it's been a very swift move back to these recent lows. So gold here is pretty stretched to the downside. I think it's completely closed outside of the you know, I was looking at this with Bollinger Bands earlier, so I think it's completely outside the standard two standard deviation lower Bollinger Band. So again, you could probably expect a snapback outside of that and coming into some prior support, or at least a pivot level. So you know, perhaps we do get a snapback here, but regardless, it's pretty damaged again, and it's just tough to want to do too much with this right now. Definitely need to be careful with gold. Silver, similar situations, not as hammered as gold has been, but still getting beat up here, back below this 1480 level. That was again a critical level going back you know, into end of last year. So again, gold metals not looking too hot right now. If we look at some other markets, we'll look at TLT, starting to slide lower. This is now back below clearly our 123 sort of line in the sand. So this one's starting to trade over as well. So all around these commodities, metals, they are starting to weaken here. So cause for concern for sure. Now, if we look at some other, if we look at some leading and lagging sectors, technology continues to perform. XLK, this is definitely at the top of sort of the RSI list here. Another sector that's continuing to work now is financials. These are holding strong. In fact, they were up today, closed up 41 basis points, and they're bumping up against this 2450 resistance level. So I think if we can get a push through there, you're going to see even more of a pop in these names here. So definitely holding up as well. And even energy is, you know, continuing to try and hold up. I know we had the slide off on crude today, but XLE broke out above you know, this 69.60 or so pivot high here, and it's trying to trend higher again and put in a second leg higher. So weak today, but still looking pretty good overall. As far as what's been weak, I mean, semiconductors today got beat up 2.6% to the downside. Again, still just coming into its 20-period exponential moving average, so still pretty strong overall. It's holding up, but a little bit of weakness there. And utilities look a little bit vulnerable here. We had that swift move down a couple of weeks ago. We have this bear looking flag higher into some of these moving averages, and now potentially looks like we want to start to roll over here. So XLU, again, this is just range bound in the bigger picture, so you know, not too much that's interesting right there for the utilities. Now let's look at some individual names. We'll run through these pretty quick. Apple continues to trend higher here. It's touching its 8-period exponential moving average today. Want to see it get some stabilization around here to hold that pent-up momentum. Again, we talked about this band of supply that it was going to run into, and it basically ran right into it and paused and rejected a little bit. So we want to see what happens there. But again, short term, Apple still looks pretty constructive. Google, its all-time highs thing, I don't really need to say too much else about it. Really strong on every time frame. Netflix is getting back up to this resistance level again, so we want to see, does anything change in here? We're just coming back up to this top end of this range. We would expect some resistance up here. Let's see how it handles it. Amazon, strong day today, completely ignoring the market, 2.29% to the upside, extending itself away from all the fast-moving averages. So again, all-time highs, super strong, definitely where a lot of money and rotation is happening. Facebook reported earnings yesterday. Really favorable reaction, all-time closing highs here, strong day, 4.6%, a little bit of a topping tail. Maybe it needs to just come in a little bit, maybe it needs to fill this gap, but for now, Facebook, of course, off to the races. Twitter was weak today. It's still just hanging out in this range. Technically, nothing's really changed. This $28 level, rather. It's very important, so the bulls do want to see this get defended here. We don't want to keep retesting this level, so let's see how this one continues to act. Alibaba, this one still hanging high. It's really extended here. It's been on a very sharp bounce ever since bottoming out below $60, so very constructive action in Alibaba. Probably could use some rest. Still very strong though. GoPro threatening to break down from this post earnings range today, closed below $25, basically on the lows of the day. So you're gonna have to see if this is going to continue to roll over, or is it going to try and still stabilize here, after its poor earnings reaction just the other day. So that's and actually we'll look at Tesla too, because this reported this week. Broke out to the upside, has a nice good sized gap here. The fast moving average is starting to race higher again. Big picture, still range bound, still pretty messy in here overall, but it is constructive that Tesla did try and make or is in the process of making a higher low here at 210. It didn't come back down and retest this bottom end of this range, or all the way down at 190. So that is constructive, but again, still has its work cut out for it to march higher. Now, as far as some setups, I did post a couple of these yesterday on the stream. MDU is one, building materials name here, and this one has been beaten up for quite some time, but it did have a strong push off of the lows, and then it flagged out here. It looks like it's trying to get going. It was a pretty quiet day. You can see on the weekly chart what this looks like, downtrend for a while. Had the nice push, moving sideways, and now it looks like it could continue again, so that's something worth watching. Time Warner, this one is still hanging high up here. It's been moving sideways with some very clear resistance at 190. Still want to keep this one on watch. I think this one could push if it can start to close back above 190. CHTR, I've talked about this one as well for a little bit. Charter Communication, again, above 190. This one could start to move again. It's been in a long-term uptrend. It's been moving sideways for basically all of this year. Keep an eye on these highs right here for continuation higher. AVT, I posted this one yesterday. Monthly chart, you can see what I'm looking at. Multi-year resistance here right around 46 and a quarter, 46.50. That's right where we are now, so keep an eye on that one for continuation higher. That's the weekly chart. That one could be pushing through pretty soon. And then finally, SCS, this one here, steel case. I actually don't have any lines drawn here. Let me show you what I'm looking at. I mean, basically it's this $20 level that that we want to keep an eye on. If you look at a weekly chart, you can see what's happening. We've been kind of grinding out higher highs, higher lows here for multiple years, and you can see now we were consolidating at these all-time highs, but more recently we are right around $20 or so. That would be sort of the lid on price. That's where we want to see us break above for some continuation higher. So I hope that helps. I hope those ideas help, the analysis helps. Again, I want to remind everybody the webinar next Tuesday. Even if you can't make that date, head to thetraders.com/webinar, drop your email there, and you'll be registered. I hope to see you guys there, and as always, thank you for watching. I will catch you next time.